Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitment to Traders review. Today we're going to have a look at the 38th COT report of 2018. Before I go into the review, a reminder, we've got two new services out, futurestradingguides.com, focusing on futures markets, and FX Trading Guides, which of course is focusing on FX markets, but we've also added cryptocurrencies as well. Back to the review, and let's start off with our first market, which is the Swiss franc. We have a huge 34% change in commercials positions, 37 in large speculators. These changes are unquestionably the largest change in the past 52 weeks, so basically the past 1 year, as you can see on the chart. Very, very significant bearish COT change signal suggesting a move downwards early next week in the Swiss franc. Jumping to the 5 years chart, you can see that the last few weeks we have moved away from this very large, it was actually an all-time bullish COT extreme in the Swiss franc, and as you can see it was a very successful signal. Of course, if you've been following my COT reviews, I'm sure you remember I've been pointing this market out for you, with giving us a very great opportunity. Now, who knows? Maybe this change signal that we got right now is a good signal for maybe profit taking if one considers that as an option. Don't forget though that on this 5-year chart, it's pretty visible that bearish extreme levels are actually further away if you look at this 5-year chart. So there's still plenty of space left for traders to move towards their more bearish extremes. And of course, if this continues, this trend, we would see the Swiss franc going even higher up. So that's what we can analyze from the COT report right now. So let's move on and have a look at the sugar market, where we have a 30% change in commercials positions, 35 in large speculators. Again, we are talking about very large changes in traders' positions. We've seen similar changes in the past, maybe even greater ones, but they're definitely amongst the largest changes in the past 52 weeks, so we should have an eye on the market. It suggests that there should be a bit of a decline coming early next week. That's of course a big question whether or not that would happen, but jumping to the 5-year chart, we can see a more a wider perspective about the sugar market. Now here you can see that the extreme is definitely still much closer to the bullish side, since, as you may see back over here, mid 2016, when we had this significant bearish extreme in the market, which of course helped us catch this top in sugar prices. Since then, we've been in a very significant downtrend. Now, this bullish extreme that actually has been present for quite some time now, we can say 2 years, hasn't taken its effect on the market yet. So prices still going south. But definitely, if you are following this COT report, you should be coming to the conclusion that there may actually be, in the medium to long term, a major change in the trend of sugar market, and we could see higher prices coming. The next market is the Mexican peso, with a 20% change in commercials positions. Again, much greater than average change size, bearish, as in case of Swiss franc, and we've just seen sugar. So that suggests a continuation of this decline that we've seen in the past few days. Jumping to the 5-year chart, you may see that well, we're more or less in between the two extremes. It can move in either way. We had this relative bullish extreme a couple of months ago, and you can see how well that stopped this decline in the Mexican peso. It managed to rally a bit. There's a bit of a stagnation now that we've seen, and of course a question arises which direction it would move. The change signal, of course, suggests that there may be a downward move in the Mexican peso. Jumping to COT extreme for large speculators, we may find soybean oil on top of our list, as we had last week. So the extreme simply increased further. It is, of course, a bullish COT extreme signal, and after this nice decline, since basically the end of 2016, you can see how traders change their positions, and we've reached to this all-time extreme in case of large speculators, but as you may see, commercials are also pretty bullish right now about the market. So that suggests there may be a major trend changer coming in soybean oil. The next market is the coffee market, where we have all-time COT extreme not only in large speculators positions but also in commercials. So of course, as you may see, and if you've been following the reviews, we've been talking about bullish extremes in the coffee market. That's simply just becoming larger and larger as prices move downwards. So it's just a reminder that you should still have your eyes on the coffee market. There are some pretty good opportunities here. Of course, time-wise, you should be very cautious. Nevertheless, we don't see all-time COT extremes that often all over markets. So that's something we should be watching. Now, our last market for this review is the New Zealand dollar, where, as you may see, we had a 14% change in commercials positions, 16 in large speculators. So these are bullish change signals, and all this pushed the extreme to an all-time bullish extreme. So interestingly, compared to the Swiss franc that we've just analyzed, where we may expect a bit of a decline early next week, the New Zealand dollar seems to be pretty strong right now, and the COT report suggests further increase in the New Zealand dollar. So that was all for this review. Of course, a more in-depth and detailed COT analysis can be done at cotbase.com. So please visit our site and check it out if you are interested in more COT analysis. Thank you for watching, and have a great weekend. Take care. See you next week. Bye-bye.